Now let's talk about China, the world's second biggest economy. Its latest data is out today, so it shows that industrial output really struggled in August. Numbers out as well showing that its growth is at the weakest pace for more than 17 years.
Yeah, and this all comes as the US gets ready to impose new tariffs on Chinese-made goods.
Well, let's talk to Dr. Shirley Yu about this. She's Senior Visiting Fellow for the Institute of Global Affairs at the London School of Economics. Great to have you on Business Live. So just tell us a bit more about today's data. What does it tell us about how China is doing?
Well, there's certainly downward economic pressure, there's no doubt about it, but that's very much expected. I think the uncertainty of the trade policy actually hurts the economy, especially the emerging economy, including China, more than the actual trade policy itself. But over the past few months, China has used a combination of fiscal and monetary stimulus measures, including exchange rate depreciation, to tackle, I would say, a large chunk of the exogenous economic shocks that came from the trade war. 2 trillion RMB's tax cut was announced, so that's roughly $320 billion of US dollars, and on top of $400 billion of infrastructure spending package. The RRR ratio has gone down to 12-year low, and the exchange rate has gone down about 8% since its peak point last year. So now if you look at Premier Li Keqiang said it might be difficult for China to hit a 6% growth rate for this year. But even at a high 5, that's still a significant growth momentum for the second largest economy in the world.
A silver lining to all of this, both sides of this ongoing trade war, the US and China, they are due to meet in Washington soon. That's progress. What do you hope or expect to come out of those talks?
Well, there has been some conciliatory moves on both sides recently, but that's really because of a specific timing. That's October 1st, when China celebrates the 70th anniversary of the founding of the People's Republic of China. But that doesn't really resolve the fundamental issues. But what is really, really meaningful is China's proposal at the October trade negotiations to have a dual-track approach to the negotiation. China is basically saying, well, let's have the trade subjects on one track and all the other issues on the other track. And over the past 40 years, China has been very successful at implementing a dual-track approach to many thorny issues.
Well, I was just going to say, just unpack that a little further, because that's really interesting. When you say, dual-track, what it's saying is, let's agree on trade now, the bits that we can see eye to eye on, and let's park to one side the more tricky issues. Is that
Absolutely, yes.
And how has China done that in the past where it's seen success?
Well, the trade imbalance, I think that is the easiest part of the puzzle, really. The more difficult issues are the state capitalism, Huawei, and manufacturing 2025, etc. And so over the past 40 years, China has done many dual-track approach to its thorny resolutions of difficult issues. Market reform. Let's reform a little bit and let's reform a little bit more. One country, two systems. Let's have Hong Kong and Macau back to China. And in 50 years' time, let's test what's going to happen. And so this dual-track reform is potentially, it can potentially bring the endless cycles of very nuanced trade negotiations over a very long period of time.
Okay, Dr. Shirley Yu, fascinating to talk to you. Many, many thanks.
Thanks for